You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is time once again for TWIFO, This Week in Futures Options, the program where the name pretty much says it all. We break down the week that was and indeed still is on the futures options side of the fence. So what's moving out there, and who knows? Energy, dairy, equities, metals, crypto. You never know what's going to make it on the show. That's why you have to tune in every week. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-compelling, ever-scintillating, ever-tantalizing, at least we tend to think so, Options Insider Radio Network. I see the numbers, so clearly you folks agree with me, coming off yet another record month, the hottest month in the 15-plus year history of the network. So thanks to all of you out there who continue to devour our content and drive up our bandwidth bills. We love you all. Of course, if you want to go above and beyond, you want to get exclusive content like our pro Q&As. We had Scott Nations on last week. We had a great one this week with Jim Carroll on the volatility side. So 2 back-to-back on the vol side. Options oddities, of course, every Friday. Live streams, giveaways, a whole bunch more. Theoptionsinsider.com/pro is the place to go to begin your journey to the dark side. And let's see who's joining me today to take that journey with me. Joining me in the CME Group and FTSE Russell hot seat, our old friend, Mrs. Carley Garner, the senior analyst and broker over there at DeCarley Trading. Carley, welcome back to TWIFO. It has been too long.
Thanks, Mark. It's good to be here.
Just had your buddy Russell on last week. He's always saying great things about you. He's going to be jealous that you're on instead of him.
What a nice guy.
He's an acquired taste. Luckily, you and I have acquired it, so he's okay for us. All right, Carley. It is that time then. It is time for the Movers and Shakers Report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everyone. Welcome to the Movers and Shakers Report, the portion of the show where we break down everything lighting it up to the upside, a.k.a. the light side, and to the dark side this week over there at CME. If you want to see this report for yourselves, if you follow CME on Twitter, they tweet it out. We always put it out right before the show as well. So it's one of the few premium Bantix reports you guys can get your hands on. Otherwise, head on over to bantix.com. Click on the quick strike link, kick the tires, and light the fires over there. We're Nick and his team really putting out cool stuff, adding new wrinkles, new bells and whistles all the time. If you're interested in these products, you owe it to yourselves to check it out. Bantix, Bantix.com is the place to go. Tell them I sent you. It'll put a smile on Nick's curmudgeonly face. You can tell him I said that. All right, Carley, it is that time. Where should we begin our journey this week? To the light side or to the dark side, madam?
I feel like we should go to the light side this time around.
All right, we can do that. You know, the last couple of weeks, it's been kind of weird out there. 2 weeks ago, we had, Carley, the most biased report I think I've ever seen since we've been doing this show. We could only get a dark 4. We couldn't even get a bottom 5. That's how much green was on the screen that week. Last week, it got a little bit better. And then this week, we're biased in one direction again, but at least we can put together a bottom and top 5 this week. Looks like we can do probably about a top 8 if we really wanted to out there this week. All right, to the light side we go here. Number 5, listeners, to the light side. We're going out to the ags. In fact, a lot of ags in our upside this week. We've got soybeans, number 5, 3.15% to the light side. Number 4, back to energy, WTI, our old friend WTI. Usually it's nat gas in this spot, but this week it is WTI taking the number 4 spot, up 4.75%. It was number 4 in the other direction last week, off 3.75%. So getting that back and then some this week. At number 3, back to the ags, it's corn, up 6.62%. Then we're going to hang out in the ags some more with SRW wheat, a.k.a. Chicago wheat, up 7.64%. It was number 2 in the other direction last week, off 8.17%. So once again, getting most of that back this week. And then number 1 this week is heating oil, up 9.56%. It was number 1 in the same direction last week, up 3.75%. By the way, before you get excited, I remember Russell got all excited about trying to talk about it on the show last week. If you heard the show last week, you know it doesn't do a lot of paper. This week, it has a whopping 3,510 contracts on the tape. So that's a little bit more respectable, but still not a ton of paper to parse there. All right, to the dark side we go. Number 5, our old friend Lean Hogs, hanging out number 5 to the dark side this week, off 3.03%. It was number 3 in the same direction last week, off almost 5.5% last week. So it's been a rough couple of weeks for the Hogs. Once again, we're kind of bifurcated on the energy side as well, because RBOB coming in at number 4, off 3.62%. So another week where we have some energy to the light side and some energy to the dark side as well. RBOB was number 1 to the dark side last week, off 9.3%. Number 3, out to the NASDAQ, the E-mini NASDAQ, off 3.64%. It was number 4 in the other direction last week, up about 1.8%. Number 2, actually 2 and 1 are 2 of our frequent offenders here. All we're missing is nat gas this week. Number 2 is Bitcoin, off 8.19%. And number 1 with a dark side bullet this week is lumber, off 15.5%. Lumber has been swinging wildly, and it takes the number 1 spot yet again this week. Unfortunately, you know the deal. Not a lot of options paper in lumber either. All right, Carley, we have a lot of living on both sides of the tape this week. We have equities, we have ags, we have energy, we have crypto, all lighting up our movers and shakers. Where should we begin our journey this week?
Let's go to energies.
All right, energy. I think we can make that happen. To the energy we go, listeners.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, everybody. Welcome to the energy segment. It's like I knew, Carley. I already have it pulled up. That's how well I know you by now. I knew exactly where you were going to go first. Of course, listeners, you want to see these reports for yourselves, CMEgroup.com is the place to go. Then go /TWIFO, TWIFO. That is, of course, the name of the show. That will get you to the TWIFO reports. You're going to see that asset class drop down. Go down 3 slots to energy. All right, Carley, A lot going on, a lot of headlines in the world of energy. What is lighting up your tape out there this week?
Well, we've got our eye on natural gas. I mean, obviously, prices in Europe are just complete insanity. In the U.S., it's a little tamer because of logistics. We can't export enough of our natural gas to really put a dent into their problem. And while it's keeping our prices elevated, it's probably not going to be the obscene levels that Europe are seeing. With that in mind, I have a feeling the natural gas rally here in the U.S. probably has a price cap on it, somewhere between $10 and $11. Simply just, again, because we can't export enough gas to really push the demand up much higher, to get much higher prices than that. So the good news is for option traders, the vol is massive. So you can put together a pretty good spread if you're willing to take the risk. It's scary, but maybe doing something like buying a put spread and then selling a call to pay for it will make sense, not here, but from higher levels.
Nat gas, not a shy product, always known to have some impressive vol levels out there. And if you're one of the people out there, listeners, who's maybe looking at equities right now, seeing VIX and the other indices kind of hanging out around a 20, low 20s, you're saying that's not a lot of juice. Well, then allow me to present nat gas for you. By the way, listeners, we're just talking about WTI. We'll get there in a second. We'll pop out into nat gas as well. That is a couple of slots below that there in the product family, and then go off into nat gas. Nat gas hanging out 937 right now, so north of the 9 handle, threatening that 10 handle we've been talking about here for quite some time. Yeah, all the headlines lately, Carley, we heard rumblings coming out of Australia. They're going to limit exports. Australia, a kind of surprisingly strong exporter of LNG. Of course, everything that's going on in Eastern Europe as well. So there's been a lot of headlines in nat gas over the past couple of weeks. I expected it to be in our movers and shakers report this week, yet not so much. Kind of a quiet week here for nat gas, I guess, especially given the vol levels. Talking an 80 vol out there, Carley. So did you expect some more this week as well?
Yeah, I actually think vol has another run into the triple digits. So I'd be patient. I wouldn't force anything. And if you do happen to miss a trade in natural gas, it's not the end of the world. It's a lot better to be on the sidelines wishing you were in than being in the market wishing you were on the sidelines.
I know you've always got a nice risk reversal or maybe a call ladder in your back pocket to the upside in nat gas. So what are you working out in nat gas this week, Carley?
Well, I mean, we haven't done it. We haven't put out any recommendations yet, but what we have our eye on is doing something like maybe using November options, maybe doing something like buying a $9 put, selling an $8 put, and then using a short $17 call to pay for it. You'd be surprised if you start looking at the prices of some of those deep out of the money call options. A $17 call as of yesterday was bringing in like $4,000. So they're really expensive, and that's with natural gas in the high 9s. So that's pretty wild.
Pretty wild. A good way to sum up nat gas. Usually a little bit tamer this week, but let's see what we have on the front here from an action perspective. About 350,000 contracts on the tape this week. So an active week, but not an explosive week. We usually see north of 400,000 this time of the week for nat gas listeners. So again, a kind of a surprisingly tranquil week for nat gas out there. And of that paper is trading like an equity. 28.5% of that went up, I should say, in the contract that has 1 day to go. So very equity centric. We're going to go a little bit farther out, I think, listeners. We're going to go to the October contract that has a whopping 33 days to go. That did about 25% of the paper this week, so a pretty active contract as well. The vol out there, just a little bit shy of 80. It's about 79.30. That's off nearly 3 points, about 2.9 points this week. So nat gas, as Carley alluded to, very volatile, very frothy out there. So again, if you're kind of looking at equities or other places where you normally trade and are not really liking the vol levels, allow me to suggest nat gas, as Carley mentioned, with the caveat that you're down for the risk, because this is no set it and forget it type trade out here. 80 vol, it merits it. It usually is rocking and rolling. So don't just come in for the vol. Make sure you're ready for what that entails. But intriguing stuff nonetheless. Let's get out to the skew. The skew last week, the puts 2.2% cheap. This week, getting cheaper, 6.5% cheap. So the puts coming in. The calls last week were where the action was, 7% bid last week. This week, even juicier, 8.4% rich. What does that mean again, listeners? That means the 25 Delta puts are at a 6.5% discount to that roughly 79 at the money vol level, and the 25 Delta calls are at an 8.4% premium. So that's how that skew is lining up. So if you're doing spreads out there, you know what you're looking at from a skew perspective. In terms of the most active contract, it was the 10 calls. That's not exactly surprising. We're threatening that 10 handle, have been for a while, so the 10 calls have kind of been lighting it up. looks like across the term structure. The most active was in that SEP contract that has about a day to go. They did almost 16,000 contracts this week. It seems like folks were bailing on the 10 strike all week long. We had 3,100 going up on Monday, 5,500 on Tuesday, 3,800 on Wednesday, 3,400 today. Pretty much closing every day this week. So folks may be deciding, at least for this week, 10 was a bit of a bridge too far. Maybe getting the heck out of Dodge. Either way, a lot of closing paper, nearly 16,000 contracts on the tape on the 10 calls in September. And then behind that, we have kind of a tie for number 2. It is the 11 calls, doing about 8,000 contracts this week, also in September. The big day for that was Monday, 3,700, 3,300 on Tuesday. The rest of the week kind of quiet. Looks like it's been kind of back and forth opening to closing. And then right behind that, we have the 10 calls in October. I remember I said the 10 strike popular kind of across the term structure. The 10 calls doing about 7,800 contracts in October. The big day, Tuesday, 5,100 on Tuesday, about 1,000 on Monday, 1,000 today, and about 700 yesterday. Kind of back and forth opening to closing on that strike. But again, we have about a month longer time frame there. So a little bit more time to play with the 10 calls there in October. Let's see if anything else is lighting up the tape a little bit farther out. 10 calls also active in February of next year, doing about 1,700 contracts. But it isn't all calls, listeners. Again, we talked about looked like a calendar on the 3 put strike last week. We're seeing the 3 puts active again this week. Looks like the similar trade, the April, May 3 puts and the April, May, and June 3 puts, all doing 2,245 contracts. In fact, looks like it goes out to July and then August. I don't know, Carley, did you notice this kind of 3 put? I guess you can call it a stripper. The 3 put strike has been pretty active for a couple of weeks. Have you been noticing these types of calendar plays on the 3 puts in nat gas, Carley?
I haven't. 3s, so that'd be quite the move if we saw $3.
Yeah, it was trading last week and it's going up again this week, 2,245 times on the 3 puts. Again, in April, in May, and in June. You think it would stop there, but no, it continues. It goes out to July and then to August and September here, and also October. Wow, they kept that all the way up. So multiple months, all doing 2,245. So they weren't done last week. They came back in. Let me see if I can look really quickly as what they are up to. If they did it all in one day or if they spread. No, they've been trading all week. I'm looking at the 3 puts here in October. They were trading pretty much every day this week. So
that's interesting.
Yeah, but it's the exact same amount of volume on every month. So that's not a coincidence, but
no.
Weird stuff afoot here. So yeah, it's not all 10 calls, Carley. It's just mostly 10 calls. And then a little bit of 3 puts out there as well. So yeah, 3 puts by next summer, listeners. Is all this going to be behind us by next summer into the fall? Are we going to be looking at a back to where nat gas normally tends to hang out that time of year, somewhere around a 3 handle? It's like someone might be playing on that one. I need to dig in some more about it, exactly what they're up to out here, because these puts they were active last week and they're active again this week. Nat gas 3 put time strip, for lack of a better term out here. Before we get out of energy, let's pop into WTI as well. That is, of course, on our movers and shakers this week at number 4. Carley, I know you're watching nat gas a lot. Anything catching your eye in WTI this week?
Yeah. So, we've seen some really big up and down days in crude oil, but if you notice, we're literally not going anywhere. We're just kind of flatlining. Front month's pretty comfortable around 91. That said, I tend to lean lower in crude oil over in the big picture. In the short run, I think we could see 100, 102 again. I think that's possible on some sort of a spike, but I wouldn't trust any rallies. This is the type of market that once the downside starts occurring, sometimes it's hard to stop. And I would say if we got a break below about 88, it'd be just open the floodgates to massive selling. Even after all of this corrective action and digestion we've seen in the last several months, speculators are still holding a decently long position. And we haven't really seen the capitulation that needs to happen in oil to really firmly put in some sort of a bottom. So I tend to lean lower. We'll see what happens. I know option players, the last I looked, were heavily on the call side. So we'll see how it goes.
We shall see indeed. Pop out of the nat gas, listeners, go up a couple in the product family to WTI, back to where we were just a few minutes ago. Like we said, about 92.5 in that front future in WTI, up about $2 or about 2.25% on the week. In terms of action, similar numbers to what we're seeing in nat gas, about 360,000 contracts on the tape. So kind of light. But then again, it is August, listeners. These are not exactly the most robust periods for the market out there. 43.7% of that paper going up in the October contract has about 21 days to go. So we will hang our hats out there. What is the vol in WTI this week? 44.5, off about $1.50 this week, but still fairly frothy, almost 2x what we're seeing in VIX and a lot of the other major products out there. So again, if you're looking for vol, the energy category has it for you this week. In terms of skew, the puts last week, 5.7% bid. So it looks like the options market agreeing with Carley this week. The downside is where the interest is. 8.8% bid are the puts this week. So getting a little bit more juice out there. The calls last week, 3.7% cheap. This week, 7.2% cheap. So WTI skew in October lighting up like an equity. Bid to the puts, deep discount to the calls. Interesting stuff afoot. Let's see what the big trade was out here this week. And I said we're at about a 92.5 listeners. It was the 105 calls in October leading the dance this week. 13,005 of them going up. The big day actually today, 5,000 today, 4,800 on Tuesday, 2,100 on Wednesday, and 1,000 on Monday. Looks like it was back and forth throughout most of the week. So 105's not quite getting there this week, listeners. Intriguing stuff. Also, right behind that, we have the par calls. I expected those to kind of take the top spot, but 105's taking it this week. Par calls right behind it, the 100 calls, listeners, about 10,400 contracts. The big day for those was Tuesday, 3,500 on Tuesday, 2,600 today, 2,300 on Wednesday, and about 1,800 on Monday. Again, kind of back and forth on that strike throughout the week as well, opening and closing. Right behind that, it's not all calls all the time, listeners. There are some puts lighting it up this week. It was the 80 puts, 9,400 of those this week. The big day was Monday, 3,200 on Monday, 2,300 each yesterday and today, and about 1,500 on Tuesday. It looks like those are mostly opening, so that could maybe account for some of that bid we're seeing to the put skew, and also that call action. Seems like folks maybe taking off some upside calls, hence the decrease to the premium out there in the call wing in WTI this week. Let's go a little bit farther out, see if we see any other interesting and or aberrant paper lighting up our tape, listeners. The par calls also pretty active in December, almost 11,000 going up, 10,700 this week. The big days, Monday and Tuesday. Tuesday, 4,300. Monday, 4,100. About 1,500 today and about 1,000 yesterday. It's like mostly opening throughout the week. So opening paper back on the par strike in December. And then also it looks like we have a little bit of interest in some 70 puts. That's out in June of next year. 2,500, 2,700 actually of those. So it's not all puts, all calls, I should say, all the time. But if you want to get a little bit farther out, let's go to, how about the 120s in January? How does that sound, listeners? We saw about almost 6,000, about 5,700 of those going up this week. Actually, most of that today, 4,100 today, 1,100 on Tuesday. The rest kind of scattered throughout the week. So some action on the 120s. Doesn't seem like it's 121s did 1,000 today. So they remember we saw those weirdly tight verticals lately. Listen, I think it was the 119, 120, 120, 121, something along those lines. We speculated that someone was putting those up as effectively a stupid, so trying to get the half strike in between. Not seeing quite that this week. If they're doing it, it's 1/4 on a ratio. So that doesn't make a heck of a lot of sense. But either way, the 120s out here in January of next year also pretty active. All right, let's see if anything else is lighting it up out here. No, it seems like that's kind of, don't see those weird prints like we saw the last couple of weeks. Carley, did you notice those? I was kind of speculating about those with your buddy, Mr. Rhodes, on the show last week. There are these pretty sizable prints going up that were extremely tight. So they didn't seem like they were verticals. They were like, D's 120, 121 type vertical / stupids, call them what you will, going up for size, $1 wide. Huh. Very strange. We kind of speculated maybe they was going for the half strike in between, because why else would you do that? But it was just very strange.
Honestly, I don't have a good explanation for that. I agree, it's strange. I can tell you that just because a trader has a big account and a lot of money and can put on a big position doesn't necessarily mean they know what they're doing. So I've talked to a lot of traders that probably think their skill level is a little higher than what it actually is. And so it might just simply be someone that doesn't understand how the dynamics of getting in and out of that trade would work, but who knows?
Yeah, we say that all the time on some of our other shows. The size money, not always the smart money, Carley. We've seen many examples of that to the contrary. And so whoever's putting up those stupids, whatever they are, they call them stupids for a reason at the end of the day, listeners. I'll just leave it there with my viewpoint on that type of trading. All right, let's roll on out of energy now. It seems like we have quite a few ags lighting up our movers and shakers this week. So maybe we'll head out to the ags next.
It's time to get our hands dirty exploring the latest options, trades, and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, listeners, welcome to the wonderful world of ags. You know where to find these. It's pretty easy. It's an alpha order list, so go right to the top for ags, and then it's right there, and then we'll dive into some products. Carley, what's lighting up your tape in the wonderful world of ags this week?
We're paying most attention to corn. We had a little bit of a reversal today, and I think we get some follow through the next couple of weeks. Seasonally, this is just not the time of year for rallies to hold. So I like the downside in the short run in the grains, mostly corn and soybeans.
Corn, definitely, the markets agree with you. Corn putting up some numbers this week. 686,000 contracts on the tape for corn. Corn also usually hangs out in that north of 400,000 range, but 686 is a pretty impressive number. Corn, as you mentioned, number 3 on our light side movers and shakers this week, listeners, up 6.62% since our show last week. It's up 5.11% just since the start of this week. So a lot of that run obviously coming this week. Coming into this segment, corn at a 658 in that front future. Of course, that's going away pretty soon, but that's where we're hanging out in corn right now, listeners. And of that 686,000 contracts, 39% going up in the DEES contracts. Let's hang out there this week, listeners. Let's see. What is the vol in corn? We're just talking about, pretty high, nearly 80 vol in nat gas and about a 44 or so in WTI. Where does corn fit on that spectrum? We already said equities, VIX in the low 20s. Corn's a little bit more elevated than equities, but not quite at the WTI levels. At about a 29.30 right now in that DEES contract. That's off about half a point. Of course, if you go a little bit nearer duration in the term structure, you get out to the mid to late September contracts. Those are at about a 34.5. So a little bit more juice there. Of course, that's getting a little bit near dated. That's getting more into the gamma territory, but still a little bit more vol. That's where you're interested in hanging out. Listen, don't want to go all the way out to December. In terms of the skew, last week the puts were 5.7% bid. Wow, huge swing. This week, the puts have swung all the way in the other direction. They are now 5.9% discounted to the at-the-money vol. So that's a huge swing in the skew for corn. Wow, that's looking like a Bitcoin or a gold swing, but in corn. That's interesting. And the calls last week, 9.2% rich. Last week, 5.5% rich this week. So the calls coming in and the puts getting annihilated this week. That is interesting. Let's see what kind of paper we're seeing to maybe lead that charge. Looks like the big dog out here this week, listeners, were the 700 calls in December, doing nearly 28,000 contracts this week. The big day, Tuesday, about 12,000 contracts on Tuesday, 7,700 on Wednesday, and about 4,000 each Monday and today. Seems like mostly opening throughout the week. So opening on the par calls, that could certainly account for why some of that call wing may be coming in. Maybe some folks blasting away at the 700 strike there. Then right behind it, we have the 7 halves doing 25,400 contracts this week. The big day, also Tuesday, 13,200 going up on Tuesday, 4,900 on Monday, 3,900 today, and 3,300 on Wednesday. That one a little bit more back and forth throughout the week, opening to closing. So intriguing action there on the 700s and the 7 halves. Not to be outdone, there are some puts lighting it up this week as well. The 600 puts doing nearly 24,000 contracts this week. Also Tuesday, the big day for corn, 10,200 contracts on Tuesday, 6,500 on Wednesday, nearly 5,000 today, and 2,200 on Monday. Again, kind of back and forth opening to closing throughout the week. So that's quite a range of action there. 600 puts, 700 calls, 7.5 calls, all lighting it up out there this week, and all for pretty impressive size, hence the impressive amount of volume going up out here this week. Let's jump a little bit away from the action in December. There also is some action in the SEP contract this week going out tomorrow. So this is where corn looks a little bit more like an equity, doing some near-dated paper. Almost 21,000 contracts going up in the 700 calls in the September contract. The big day for those was actually Wednesday. Almost 12,000, 11,800 going up on Wednesday, 6,800 on Tuesday, about 2,000 today, and not much going up on Monday. Also kind of back and forth. Looks like most of the big pop on Wednesday, though, was closing paper. So folks maybe taking off some 700 calls earlier this week when they decided maybe we weren't about to hit that strike. Either way, a lot of action on the 700s in September and also December here in corn. Just a lot of paper across the board. People always ask us every week, Carley, just like clockwork, if I want to dip my toes into ags, where should I start? We always say corn is probably the easiest starting point because it is the most liquid, certainly. And look at a week like this is no exception. What are your thoughts on corn as a starting point for newer ag traders, Carley?
Yeah, no, I think it's a great starting point. I also point them into that direction. And one thing to keep in mind also is a lot of people want to come in and trade crude oil. Well, we all know how difficult crude oil can be, especially if you're trading the full-size contracts. But if you look at the correlation between corn, soybeans, and crude oil, they're pretty positively correlated. In other words, if you come in and start trading corn futures and options, it's not exactly like trading crude oil, but they will follow each other for the most part, or at least if you look at this year, we've had a correlation of about 82%, meaning roughly 8 out of 10 closes in corn have been in the same direction as well. So it's kind of a way to trade commodities in general because they tend to follow oil and not get your head ripped off. So I love the idea of starting in corn.
Well, you mentioned the beans. They're lighting up this week as well. They are number 5 on our movers and shakers, up 3.15%. So let's head out to the beans this week as well, because they are putting up some numbers this week as well. Not quite corn numbers. They're about half there, but still really impressive numbers for the beans. 344,000 contracts going up in soybeans this week, listeners. By the way, soybeans right now in that front contract going out tomorrow is at a 15.53. You get beyond that, things are a little bit cheaper at about a 14.30. In that contract. So this week, you're up 64, almost 65 handles, about 4.3%. You get beyond that into a little bit later contracts, you're up about, 25.75 points, or about 1.8%. Still a pretty active week out here for the beans. And in terms of the paper, nearly half, 42% going up in that November contract. So not in Dece, but in November. Interesting. That future is at a 14.29 3/4. Again, up about 25.75 or about 1.8% on the week. Vol-wise, what is the vol in soybeans? About a 23.5. So a little bit north of where equity vol is, a little bit below where corn vol is, and certainly far below where we're seeing energy vol right now. And in terms of skew, not a huge evolution, certainly not like what we saw in the corn this week. The puts last week, 1.4% bid. This week, 1.6% cheap. So they did swing, but not to the same degree that we saw in corn. The calls last week, 1.4% bid. This week, nearly 3%, 2.9% bid. So a little bit of juice moving on into the call wing there. In terms of the most active contract this week, it was the 1,600 calls. Remember I said we're at about a 14.30 in that future, listener. So the 1,600 calls were where the action was this week. That's an interesting strike. I would not have guessed that out of the gate. Let's see. Pretty active all week long. The big day was Tuesday, about 4,900 contracts on Tuesday, 4,300 today, 3,400 on Wednesday, and 1,600 bringing up the rear on Monday. Looks like back and forth opening to closing throughout the week, even though the latter portions of the week seem biased towards opening on that 1,600 strike. Maybe that's to blame for a little bit of that evolution we saw out there in the call wing this week. And right behind that, right behind the 1,600 calls, hot on their heels, we saw the 1,400 puts also in that November timeframe, doing 14,100. So 300 contracts separating the 1,400 puts and the 1,600 calls this week. The big day for those was actually Wednesday, 6,600 contracts on Wednesday, 2,700 on Monday, 2,400 today, 2,300 on Tuesday. And again, kind of back and forth opening to closing. Looks like that big day Wednesday, though, was biased towards closing paper out there. So pretty interesting diversity of paper out here. Also, we see the 1,500 calls in November, also pretty active this week, doing about 11,300 contracts. The big day for those, back to Tuesday, 3,800 on Tuesday, 3,100 on Wednesday, 2,500 on Monday, and 1,800 today. Again, kind of back and forth opening the closing out here. Let's scan around really quickly, see if we see any other interesting and or aberrant paper out here. How about the 1,200 puts in January of next year? Those were pretty active, doing almost 7,000 contracts this week. The big day, almost half of those going up on Monday, 3,100 on Monday, and then 1,700 on Wednesday, 1,500 on Tuesday, about 500 today. So 1,200 puts. Again, interesting. Looks like a vertical may have traded on Tuesday. Maybe the 1,200, 1,300 vertical going up 1,500 times. The paper does line up in about 1,700 times on Wednesday, so that can maybe account for some of that action. Maybe we got some rolls going up here, even though it looks like not the traditional roll you might expect. So interesting stuff here, but it could be some potentially 1,200, 1,300 verticals accounting for a lot of that paper out there in January. All right, we've hung out in energy. We've hung out in ags. I think it's time for us to dive into the equities next.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, welcome to the equities complex. Get into that, drop down over there again, pop out of ags. You're going to go down a few slots there to equity indexes. Then we're going to hang out in the Russell 2000 first. That's going to be in that product family. Pretty easy to find. Just slide on over to E-mini Russell 2000. We'll set the table from a vol perspective. Then I want to hear your thoughts on all things equities, because obviously a lot's going on out there these days as well, Carley. RVX, the VIX of the small caps listeners, at about a 27.30, up about 2.5 points from where it was this time last week. So getting a little bit frothier again, not quite at the 30 handle anymore, but starting to threaten it again. VIX cash, when we kicked off the show, a little bit north of the 22 handle, about a 22.20, up about 2.4 points from where it was this time last week. VVIX, so the vol of vol, at about an 84.80, that's off about 1.5 points from where it was this time last week. And vol Q, so the at the money vol of the NASDAQ, at about a 26 even when we kicked off the show, up about 2.33 handles from where it was this time last week. That puts that VIX to RVX spread, so the large cap to small cap vol spread at a little bit north of 5 points, about 5.15 points. That's about 0.15 points wider than it was this time last week. So it's hanging out at a pretty wide level right now. And the VIX to vol Q at nearly 4 points, about 3.85. That's about unched from where it was this time last week. So a lot going on in the world of equities. Carley, what's lighting up your tape out there this week?
This week's been very interesting in equities and actually across the board. If you look at all markets, if you just looking at the chart, it doesn't look like much is going on. It's kind of a quiet week, but if you look below the surface, it's actually been quite erratic. I mean, we've seen some really big swings. The net result is kind of a flat line, but we've seen some really big swings. And I have a feeling, that's just the byproduct of really, nervous Nellies in the market, because we're coming into the Jackson Hole symposium tomorrow. To be honest, I'm not a big fan of people trading on Jackson Hole. It's just a bunch of people running their mouth. There's not a lot of policy being made. The policy supposedly is data dependent. We have a lot of data before the next Fed meeting, but that doesn't matter. All that matters is that they're going to say something and the market's going to move. So there's a lot of people out there trying to position and guess what's going to happen. Me personally, I'm going in with a blank slate. I have no opinion. We'll have to just wait and see, because you can't guess things like that. It's all emotional, and not even the chart doesn't even really matter. The one thing I can say in the S&P is we're kind of trapped in a trading range. If we drop below about 40.90, I'd say the bears have control. If we rally above about 41.90, I'd say the bulls have control. Other than that, I'm pleading the fifth.
We've touched on a lot of product complexes. We're getting into equities right now. I'm curious for you, Carley, over there at DeCarley, how does the client mix, how does it break down over there? Would you say they're mostly equities and then a smattering of others? Are they mostly energy? Is there one complex that really dominates with your clients, or are they kind of all of the above?
Honestly, we have a little bit of everything. We have a handful of, a group, I should say, not a handful, but quite a few traders in each sector, and they all do their own thing. And we give them some ideas here and there, but ultimately we've got people trading anything you could possibly imagine. We even have one guy that almost exclusively trades lumber. So we even have
Really?
lumber traders.
He's the guy.
Yeah.
So when it does 3
He's
contracts a week on the options, it's him. It's your client.
Yeah. Actually, he's actually doing futures, not options, but he's pulled some pretty big chunks out of it here and there. So I don't know. What can I say? I've warned him about that market, but he knows more than I do about lumber. It's clear.
That guy's got a high risk tolerance if he's slinging a lot of lumber, because that product.
He does. And the slippage on a single contract can be $2,000 just trying to get in and out of it. I mean, it's really crazy. It's not for me. I don't have the stomach for it, but hey, what can I say? I mean, we have milk traders. We have literally anything you can think of. We have them.
To be fair, next time you talk to that lumber client, ask him if he can do a one lot of the options so he can just boost the OI by like 25%, because there's nothing going on. This product has moved the most almost over the last couple of years. Dead trees, the most volatile thing on the planet. Who would have thought it? And yet the options can't be bothered to trade whatsoever. So it's the strangest thing. You think that would be a recipe for size options paper, and yet not the case. So your client could be the genesis. He could be the catalyst that kicks it off, Carley.
There we go. I think you're onto something. I will say, I think a lot of it has to do with a lot of brokerages just simply don't even offer the product on their platforms. So it just gets overlooked. So I don't know. I'm not sure what it would take to change that, if anything. I'm not sure it's possible.
There you go. You're not scared of lumber at DeCarley. Come do your lumber trading over there.
Absolutely.
At DeCarley. Sling them up. Hey, maybe you do a one lot of options and you account for 30% of the open interest on any given period. But hey, it's fun. We could talk about it on the show.
And then we'd probably have to fill out the CFTC position limit forms for that one lot.
Yes. You would be the entire COT report for all of lumber for that REIT. All right, good stuff. We could talk lumber for the whole show. Let's dive into some more equities here. Small caps putting up some numbers this week to the downside, actually. They're off about 0.25%, but they were swinging a lot today. So actually net on the week, they're kind of unched, which is interesting, right around 1954. So they've been hanging out, right at or above and right below that magical, mythical 2000 level for quite some time now, at about 50 points below it again this week. In terms of the paper, we're seeing about 15,000 contracts on the tape. So decent week, but not as active as we've seen small caps in the past. We see it easily get to close north of 30, pretty easily out there, if not more. In terms of the action, about 28% of that paper going up, and the SEP contract has about 22 days to go, so we will hang out there. The vol out there in small caps this week, about 24.10, so about 1 point up, 1 point north of where it was this time last week, and a little bit below that RVX measure we put out earlier. Remember that RVX is using that VIX methodology, so it's kind of a rolling 30-day metric with some skew baked in there as well. So it's never going to line up exactly with what we're looking at. Plus, we're not going out that far. We're only going out 21 days out here right now, listeners. And in terms of the skew, last week, the puts 12.2% bid. This week, exactly 12.2% bid. So no change there. The calls, 9.8% cheap. Last week, 10.5% cheap this week. And in terms of action, it was the 1980 calls leading the dance with nearly 1,000 contracts this week. Almost all of that on Monday. Looks like there was a 1980-1960 vertical. Went up about 1,000 times on Monday. Seems like paper was closing it off. So deciding maybe that was a bit of a bridge too far for this week, or maybe getting a little bit spooked. Either way, they were taking that bad boy off on Monday, and that accounted for a good chunk of paper out there in that SEP contract. Since we have Carley on, I'll look really quickly at some E-mini S&P, even though I can guarantee you, Carley, before I even pull it up, that it's going to be pretty much all puts going out tomorrow that paper was selling. Oh, yes, that is the case. Right. That is the case. 36 half puts going up 29,000 times this week, Carley. It is funny. I used to joke when I first walked into the SPX and the CBOE, there were a lot of guys out there who did this. They sold the garbage, the teeny puts, because they were teeny bid back then. And I kind of thought that paper went away, but apparently some fund or funds have reawakened to this paper here, and they're just doing it every week like clockwork in the E-mini S&P, Carley. And it's just like, again, 29,000 of the 36 half puts this week. Again, just it's the literal picking up nickels in front of the steamroller again. 36.75 puts going out in 4 days. They traded 32,000 times just today, Carley. So
holy cow.
Yeah, it's almost depressing when we break. That's why we don't break down S&P that much, even though it does a lot of paper. But so much of it is so front loaded. There are some calls to be spoken for. The 42 half calls doing 37,000 contracts this week. Those are going out tomorrow. We're pretty active all week long. It's like paper was opening on the 42 halves all week long, which is interesting given the fact that they have a day to go, and I don't think we're getting to. Well, we could. Crazier things have happened, but that'd be a pretty aggressive move in the E-mini by tomorrow, 42.50. 37,000 of those this week as well. So there are some calls. They are just obliterated by the explosion of nonsense puts. Listen, it's 43,000 of the 3,600 puts that go out next week went up this week as well. So 18,000 just today. So yeah, some funds, Carley, are just really content to tie up a lot of capital to pick up the proverbial nickels in the E-mini every week. I don't know. I don't know why they've discovered this now, but that's apparently the trade du jour. So is that what you guys are doing in DeCarley? Just blasting away at 36 half puts in the E-mini?
No, I mean, we have some clients that do that sort of thing, but I'd be interesting to see, like, if you're doing it in massive size like that, I'd be interested to see how they hedge it. I assume they're selling some futures against it here and there if something goes weird, but sometimes you just don't have time. Those options can be $4 or $5 today and literally a few minutes later be like $20, $30.
Yeah,
so
it's kind of hard to hedge those. You're right, because when they start coming against you, it's immediate. There's no time. There's no time to hedge.
You're right.
So unless you're doing it with futures to start off with, but that's not much delta, A, and B, that's kind of a weird way to do it if you are doing it that way. But I've seen crazier things. So yeah, I don't know. That's
interesting.
I scratch my head on those every week. That's why we don't talk about them that much. But for you, Carley, just for a special gift.
Well, thank you.
For you, we brought them up out here. We have a little bit of time left. Carley, you want to hang out and check out some crypto or anything else floating your boat, or you want to get straight to the listeners? I'll leave it up to you.
Sure. We can talk crypto. I mean, sure. Why not?
All right. Crypto it is then.
It's time to explore the volatile world of Bitcoin, Ether, and more. It's time to talk about crypto.
All right, everybody. Welcome to the crypto. It's easy to find. Just go one down from the ags or two up from the equities. It's number 2 there on the list at cryptocurrencies. We'll get to, let's maybe look at the micro, see what's going on in the micros. I know that's a place where you folks like to hang out here. By the way, Bitcoin moving and shaking again this week. It was number 2 to the dark side, off 8.19%. Coming into showtime was a little bit shy of 21,500, 21,495. Actually up ever so slightly since the start of the week, but obviously off since the end of our show last week. The micros doing a little bit more paper than the big ones. Carley, have your clients, have they started to warm up to the CME offerings on the crypto side? Could be the big Bitcoin options and futures, or the micro stuff. Have they started to trade those out there?
Not too much. I mean, our clients tend to find the big Bitcoin options are really expensive, like wildly expensive, and the margins are high. So that's a little too much for most retail traders. And then on the flip side, the micro Bitcoin futures, we have a lot of people that are dabbling in those, but the options are still really thin. It's odd. I would have thought that the options would pick up a lot more than they did, but there's just not a whole lot of liquidity there. And I'm finding that a lot of clearing firms don't really want to offer trading in them. If they do, it's long only. And even a lot of firms won't even allow long only just because they're worried someone's going to get exercised, and there's no price limits, and they trade on Saturdays when everything's closed. So there's not a lot of, like, from a risk management or a brokerage perspective, there's definitely some big concerns. Because if you can imagine, like as a futures broker, and you allow your clients to buy or sell Bitcoin options, many are full size, and the market closes on Friday, and then suddenly something really wild happens over the weekend, you have no way for your client to hedge his risk. And as a broker, you're just a bag holder if something really out of the ordinary happens. So unfortunately, it's been hard to get retail traders enough liquidity to get them going. But I think that'll change as time goes on and people get more comfortable with these products. I mean, Bitcoin's been around for a while, but let's face it, it's not as old school as corn or crude oil or anything like that. And so it just takes some time.
Yeah, I was looking at the numbers while you were talking. The big Bitcoin options, Bitcoin, again, the big mover this week, they did about 330 odd contracts this week. So that's decent for the big ones. As you know, listening to the show for a while, they don't do a lot of paper, but still not a ton. That's a 5X multiplier, of course. That's a big, beefy contract. The micro options on Bitcoin only doing about 600 contracts this week. So I thought they'd be a little bit more active. But you mentioned the Ether options on the micro side. They are putting up some numbers this week, nearly 18,000 contracts on the micro Ether side. Weirdly enough, getting back to your point about liquidity, Carley, it seemed like it was all in one day. It was all Monday. I'm looking at these numbers here. Like, for example, of that nearly 18,000 contracts that went up this week, most of it was going up in the SEP contract. I'm looking here. They did no paper on Tuesday on any of the strikes, no paper on Wednesday. Same for the puts. So calls and puts, kind of nothing Tuesday, Wednesday. On Monday, they were on fire. We saw 2,700 of the 1,500 calls going up on Monday, 1,600 of the 15 halves, 1,400 of the 16 halves, 1,300 of the 14 halves, and then 1,100 of the 1,600s, 540 of the 1,400s, and 284 of the 2,100s, all going up, all opening, all on Monday. I don't know if that's one trade. That's just a ridiculous trade. But either way, I can kind of see your point because they're putting up paper, Carley, but it seems like it's in massive spurts, and then that's it.
Right. Yeah. Probably just one or two traders or a fund or something like that.
Yes. If you're a broker, if you're a clearing firm, dealing with all this kind of one-sided paper, it's got to be challenging. We see that on our crypto rundown show as well. It's all calls all the time in ETH and people just buying the heck out of the upside. So yeah, challenging from a risk perspective out there. So yeah, micro ETH options putting up some numbers this week. It was apparently just all on Monday. So strange trading afoot out here, listeners. By the way, speaking of ETH options, CME making an announcement this week. They're going to launch options on the big Ether futures coming next month, September 12th. Obviously, they have to be approved, but that is the plan right now. Now, that's the big contract. That's the 50 ETH per contract. So those are going to be the big boys, but we'll see if that maybe adds a little bit more action. ETH has been where a lot of the interest over the last couple of weeks has been out there in the crypto space. ETH has just been rocking and rolling out there of late. So it'll be interesting to see if these big Ether options catch on, where the futures have actually been doing a little bit more paper of late as well. Again, if this stuff intrigues you, listeners, we have a whole show devoted to it. The Crypto Rundown every Monday on the network, or of course, you can get it on demand wherever you get our content, which these days is pretty much anywhere on the planet out there. As we keep on rolling, it is time for you folks to join the show. It is time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to your segment, the Futures Options Feedback segment. And you know what, Carley, we got a question on a live show we did last week, and I instantly thought of you when we heard the question. And this came in from a listener named Gray, so I thought I would punt it over to this show as well. Gray wrote in to ask, can you guys explain what a call ladder is and why I would want to do one? We talked about it on that show he wrote into. It was more of an equity options-oriented show, and we were kind of dismissive of the use case for a call ladder in equity options for a lot of reasons. The skew really isn't there. You're selling two of a very depressed call wing. On top of that, you're spreading the liquidity out across multiple strikes. So I'm not a huge fan of it. If you don't do it with the underlying, you have, net short units to the upside, which is always kind of dangerous. But I'm curious for you, Carley. I know you're a fan of a ladder or two. You talked about them on the show in the past. So what do you have to say for our listener, Gray, here, who wants to know, can you explain what a call ladder is? And then more importantly, why he would want to do one?
Right. So there's a time and place for call ladders. As you mentioned, on the stock side of things, it may not be worth the risk simply because you're selling options that are probably underpriced relative to the risk, at least in a lot of scenarios. So you want to make sure if you're doing it, I always say if you're selling options and you're selling naked options, even if it's part of a spread, do it like you mean it. Don't do it just for the heck of it. You need to make sure you're collecting enough premium to make it worth the risk, because occasionally markets can run away and it has to be worth the risk. Don't be, as you mentioned before, don't be picking up pennies in front of the steamroller. So with all of that said, in commodities, call options tend to be more expensive than put options because commodities have a tendency to go up really, really quickly. It's kind of the opposite of what you see in the stock market. In the stock market, puts tend to be expensive and calls are cheap. In commodities, calls are expensive and puts are often cheap. It's not always that way, but it can be most of the time. And so call ladders sometimes can make sense if, let's say, a market has already made an up move. Before I go there, I'm just going to say a call ladder is not something you want to use to try to pick a bottom. So like if you think a market's really, really cheap, a call ladder is not the strategy to use because a call ladder has upside risk. It's basically buying a vertical spread. So you're buying in near the money call option, you're selling an out of the money call option, and then you're also selling another call option naked with unlimited risk to pay for that vertical spread. So you don't want to be doing this if a market's cheap. You want to be doing it if a market's expensive, but you're a little bit nervous to chase prices higher. So for example, if let's say hypothetically gold makes a run up to $2,000 and you missed it, but you want to be in, you want some exposure, but you also don't want to buy gold at 2,000 because guess what? For the last 14 years, anything around that price area has just been like kryptonite for the bulls. So you could do something like a call ladder. When a market makes a really big rally, the options tend to get very expensive on the call side. In commodities, they do anyway. So you can buy an at the money call, and you could probably sell 2 deep out of the money calls at staggered strike prices, and not only bring in enough premium to pay for the option you bought, but also maybe even bring in a credit and give yourself a really wide profit potential, a lucrative profit potential, and even give yourself a lot of room for error. So you only want to do this in high volatility situations, not low volatility situations. But the reason you might want to do it is you can get into a market with a bullish stance that has already made an up move that you might have missed out on, or maybe you played it with a different strategy and now you don't have any more exposure. So it's a way to get upside exposure without having downside risk. So the most prominent advantage of this type of a strategy is if the market does roll over and go the other way, if you're wrong about a continuation of the rally, you have no downside risk, or at least depending on how much premium you collected to pay for your call spread, you might have very little downside risk, but it's definitely not going to ruin your life if the market crashes from there. So that's the primary benefit of participating in a call spread. You get into the market for cheap, you have no downside risk, and you probably have a really attractive profit potential as well as room for error.
Well, there you go, Gray. I knew Carley would have a lot to say on the world of ladders. I did mention the caveat on that show that if there is a use case for them, it is probably in the futures options. It makes more sense out there for all the reasons Carley just laid down. So intriguing stuff. Unfortunately, that music means we come to the end of another epic journey through the world of futures options. Carley, I want to thank you for joining us on today's journey. Before we go, if folks have questions like Gray about call ladders, and maybe they want to reach out to you guys at DeCarley, maybe they want to start slinging those lumber options, where should they go? What should they do, Carley?
You can visit us at DeCarleyTrading.com. It's DeCarley trading.com. There's lots of educational material and information, so check us out there.
There you go, listeners. You can be the one person slinging the lumber options, moving the OI hither and yon, however you like. Check them out over there at DeCarley Trading. Give her a follow on Twitter as well, at Carley Garner, Carley, Garner, all one word over there on Twitter. And of course, you know where to go to check out these reports we're talking about on the show. It doesn't have to just be during showtime, listeners. You can be anytime you want. These reports are live 24/7, 365. If you want to check soybeans at 2 a.m. on Christmas Eve, we got you covered. CMEgroup.com/TWIFO is the place to go to learn more. And of course, where do you go to learn more about all things small caps, the vol, the correlation, what's going on from a market impact perspective, and a whole bunch more? FTSE Russell, FTSE Russell.com is the place to go to learn more. Give them a follow on Twitter while you're at it as well, at FTSE Russell, FTSE Russell, all one word. That's going to do it for our broadcast day today. I want to thank all of you out there for joining us. Of course, back again tomorrow, noon Central, 1 p.m. Eastern for volatility views, and then back again after that to break down the crazy week that was from an unusual activity perspective on options oddities. Will Andrew and I be ruining our 1x2 put spreads in Gap? I guess we'll find out on that show tomorrow, listeners. Of course, if you want to listen to that, theoptionsinsider.com/pro is the place to go. We have to get on out of here. Back again next week for another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.